to be sure you're getting the most out of your retirement for all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now here's Jim with this week's Dollars and Cents tip.
Have you looked at where we are with mortgage rates? Just when you think they can't go any lower, they go lower. The average 15-year fixed mortgage, 2.75, which gives you an APR of 2.81. Unbelievable. 30-year fixed, 3.25 with an APR of 3.32. Just unbelievable. So here's what I want to talk about. Should you refinance and therefore potentially save thousands and maybe even tens of thousands of dollars? And what a lot of people are not aware of is it's very easy, if you're looking properly, to do no fee refinances. So how does that work? Now, please don't misunderstand. I'm not a mortgage broker. That's not what I do. But obviously in my field, I've got to be able to give clients advice on all kinds of financial topics. But this is something you need to cover with a mortgage broker. Okay. And there are a lot of programs out there, and definitely shop around. But here's the idea is, if you're thinking, well, I don't know if I want to refinance because I don't want to spend $3,000 or $4,000 out of pocket, or I don't want to add $3,000 or $4,000 to my loan. You don't have to do that. You can pay a little bit of a higher rate, but hey, let's be honest. If the 30-year fixed rate is 3.25 and you're paying 5.5, well, then pay 3 3/8 or 3.5. Pay an extra eighth or a quarter of a point. But then you get enough money back by paying that little bit of extra interest. You get money back at the close that basically will cover your closing costs. Okay? So that's how that works. Now, if you're upside down in your mortgage, you're not going to be able to do that. But, if you're, and really I'm focusing to people age 50 and up. So if you still have a mortgage and you've still got plenty of years left on it, or even if you only have 4 years left on it, if you can lower the rate and not cost you anything to do it. I mean, yes, I understand 3.5 is higher than 3.25. Okay. But 3.5 is a lot lower than 5.5, which is where you are now. So if you can lower it from 5.5 to 3.5 and it doesn't cost you 1 penny out of your pocket, then why wouldn't you do that? You would do that. Now, not if you're planning on moving in the next 6 months, but if you end up moving in a year or 2 years, that's okay, because it didn't cost you anything to refinance. You paid a little higher rate compared to today, but you're paying a lot lower rate compared to what you already have. So if you can lower it 1/8 of a point, if it doesn't cost you anything, why would you not do that to save 1/8 of a point or 1/2 of a point? In this case, it's just unbelievable to me that a 15-year fixed mortgage is at 2.75. That's just unbelievable. So just a good tip on your mortgage that could save you thousands or tens of thousands of dollars. If you have a mortgage, of course, the ultimate goal would be in retirement. You don't want to have a mortgage. But in the meantime, if you do, why not pay a whole lot less interest?
And that's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.